Asian shares closed in mixed territory today despite an overnight plunge in Wall Street. The drop in U.S. shares came after the Federal Reserve gave no clear indication of when it might start lifting rates again and decided to keep the benchmark rate steady for this month. Hwang Ji-hye has the details.
Shares in Asia opened to a rough start but closed in mixed territory on Thursday. Japan's Nikkei dropped 0.7%, while Korea's benchmark Kospi shrugged off earlier losses and ended 0.5% up. In China, the Shanghai Composite fell almost 3%. The choppy trading in the region follows a sharp dive on Wall Street, where investors were hoping for a stronger sign from the Fed that could dismiss chances of a rate rise in March. The S&P 500 closed down over 1%, while the Nasdaq dropped more than 2%.
And I think from an equity market perspective, where companies have been facing difficult pricing power, difficult global economic conditions, difficult domestic economic conditions, having a Federal Reserve that's not your cheerleader is just not well received, and that's why we're having the response we're having from the markets.
The U.S. Federal Reserve opted to hold its key rate steady on Wednesday, saying it was closely monitoring global financial developments and how they might affect the U.S. labor market and inflation. Plunging oil prices coupled with the slowdown in China resulted in a massive sell-off in global stock markets early this year. While this turmoil had fueled speculation that the Fed may back away from its plan to tighten its monetary policy this year, the central bank gave little indication of when it will raise rates again. Last month, the Fed increased rates for the first time in almost a decade and suggested 4 more rate hikes this year. With the latest Fed statement, volatility remains in the markets, although analysts widely believe a second rate hike in the first quarter will be unlikely. Hwang Ji-hye, Arirang News.